Hello, everyone. Welcome back. I got some really good ones for you today on this Monday, January 8th, 2024. A lot's been going on with the markets, current events. That's what we're going to be focusing on for today's video. So welcome back. Glad you made it. Glad we could hang out together. Happy New Year. I hope you really enjoyed the holidays and had a chance to kind of relax, refit, hang out with friends and family. All good things. So let's pick up where we left off from last month's video. Last month, though, really hasn't been a whole lot to discuss over the last 4 weeks. I left you guys off on a pretty strong note last year, kind of talking about the Goldilocks zone for the stock market, green shoots for crypto, the Fed beginning to pivot in their rhetoric to be a little bit more accommodative for markets, less interest rate hikes going forward, So I've kept you guys pretty up to speed on what's been going on, but, time stops for no man and more is coming. So let's discuss. All right, we have the 10-year yield today hanging out at around 4%. We're going to start with yields and rates in the bond market and dollar derivatives because these are the largest markets on planet Earth, the U.S. bond market. And action in interest rates and bonds kind of gives you an idea of what could be in store for the stock market, the real estate market, the gold market, the crypto market, the energy market. So we got a 10-year yield right now hanging out at around 4%. I think the stock market, like the S&P 500 or Bitcoin or oil or gold, would really like to see that 10-year yield come down a little bit. So, back in August, September timeframe, a few months ago, that 10-year yield was knocking on the 5% door. It hit 5% a couple times. That was really starting to put downward pressure on the stock market. However, on around October 22nd, through the 26th, somewhere in there, right before Halloween, the stock market just woke up one morning and was like, you know what? We're done with this interest rate hikes. I'm going to start pricing in interest rate cuts. And so if you look back at a chart of the S&P 500 going back about 6 months to a year, you'll notice that August, September, the S&P 500 really started to kind of roll over as interest rates, bond yields, expectations that the Fed was going to continue to raise rates to get inflation under control. As all of those things began to hit the market, it caused that S&P 500 to really start to move lower and lower. And then on about October 22nd, October 26th, that S&P decided to just bottom and then suddenly start pricing in interest rate cuts for next year. So, I think a lot of retail traders really got left in the dark on that because, a lot of the mainstream economic headlines weren't talking about interest rate cuts until like Christmas time. And so, that's a classic example of the forward-looking stock market starting to price in Fed expectations before we really saw a pivot in policy. And so what's really interesting about that end of October timeframe is that's when the narrative changed, okay? That's when the narrative went from the Fed needs to get inflation under control, more interest rate hikes are coming, we expect bond yields to continue climbing higher, bond values are really plummeting, this is scaring the stock market. That was the narrative in September, October, but at the end of October, without the mainstream headlines talking about it, anyone on CNBC talking about it, the stock market started to actually begin climbing a wall of worry, and it moved up into the end of the year. And then the narrative over that same period, that same 2-3 month period at the end of last year, it became, now the Fed's going to cut rates. And it's not even going to be 3, it's going to be 7 interest rate cuts for 2024. And so the market really started to move up in anticipation of these cuts. Fast forward to today, and about last week or so, kind of seen that those bond yields coming up a little bit to about 4, and that's kind of started to scare the market a little bit. So where we're at right now is the 10-year yield is hanging out at 4%. I think if it falls down into the 3s, that's somebody, the Fed, somebody buying bonds, driving yields back down, kind of making the bond bubble larger, stabilizing the bond market, the credit market. And once that happens, stock market will get the green light to move higher. So if you're, into the stock market and you're thinking we're going to go higher in the stock market, then look for that 10-year yield to move below 4%. If you want the stock market to move lower, well, you're going to look for that 10-year yield to move above 4%. Call it like, maybe maybe tomorrow the 10-year yield jumps from 4 to 4.15%. A move like that, a 15 basis point move higher in yields tomorrow would really send the market tumbling. And then if that 10-year yield sheds 10, 15 basis points tomorrow, we end up at 3.9% on the 10-year. That would tell me the market probably has the green light to move higher. The stock market, green light to move higher as that 10-year yield moves lower. So you can kind of see how stock market's really gotten giddy over the specter and prospect that the Fed is actually done raising interest rates, and it looks like they are. Oh, we have that plane flying overhead. Sorry about that. But kind of segues into something we can discuss in the news right now. Boeing just had their 737 MAX 9 emergency door fly off at about 16,000 feet in elevation. So if you Google Boeing news right now, you're seeing a lot of drama around their 737 MAX. So hopefully one of these planes doesn't, fly over and I get hit with a emergency exit door, or the bolts, which are supposed to be holding that door in. I guess the bolts holding these emergency exits in are starting to fly off because they've grounded all the 737 MAXs as of this morning, and they're finding loose bolts all over the place. So, tentatively bullish Boeing, though. In spite of all this bad news, guys, Boeing stock today is down about 8%. We're fans of Boeing on this channel. Boeing won World War II. Okay, the U.S. government didn't. This gave Boeing access to unlimited capital, skunk works. They probably reverse engineer the alien spacecrafts and stuff. Boeing is a monolithic company and a very powerful Dow Jones component, and we're fans of Boeing for the long term on this channel. Probably about as close to the military industrial complex as I'd feel comfortable investing. So, put another way, if you're buying Boeing, you're dropping bombs on people too. So kind of disturbing, but Boeing is still a fine company in my opinion. I don't know. I don't want to spend too much time on it, but we like Boeing on this channel. It's down 8% right now. If you didn't own Boeing, not a buy or sell recommendation, but something you could take a look at. Certainly making headlines right now. So moving on from yields and rates, we have just stocks in general. The S&P 500 right now hanging out at 4761. The year-end target I had for the S&P 500 was 4,600, so we've blown past that by about 161 points. For doing pretty good there. The NASDAQ right now hanging out around 14,800. Wants to take a stab at 15,000 on that NASDAQ. So you got all three major indices doing well. NASDAQ slightly outperforming the S&P 500 and Dow Jones, which you kind of want to see on a risk-on day. Got volatility coming down, which you want to see. Got the dollar coming down, which you want to see. So, all good things. The only complaint I'd have for market bulls today is that 10-year yield at 4%, maybe a little bit high for right now. Got gold and silver coming down a little bit. Nothing too crazy, though. Stackers, do your thing. What's up? Moving on to oil, we see that the Saudis are implementing price cuts, and OPEC is also increasing their output. This is driving oil prices down today. I think a little bit of a hit job on energy. Saudis might have gotten together with their buddies, shorted the oil market, then dropped a bunch of extra supply onto the market, slashed prices. They could have made a lot of money on the short side there. That's just speculation, though, that OPEC and the Saudis are kind of playing games with oil, kind of the fixes in kind of thing. Ordered a hit on oil, a big short on oil, clicking their heels to the bank right now as they presumably bet against oil and then cut prices, increase output. That's just coming out of some of the traders that I follow. Greg Manarino, you can go ahead and take a look at Greg Manarino's work. He's talking a little bit about the Saudi hit job, the OPEC hit job on oil prices today. Still bullish oil, but my gosh, I never saw Brent crude, WTI crude, trading down to the low 70s, guys, 70, 71, 72 a barrel for crude. I didn't see that coming, guys. That's probably the biggest blunder I've made on this channel is at $90 crude. I was like, that's the dip, buy the dip. And now we're down to 70 on crude, but still tentatively bullish energy. And I don't trade these things, guys. When it comes to energy, you just kind of want to, in my opinion, do what you want. Own mega cap energy companies, okay? Wake up every day with 100 shares of Exxon and Chevron and ConocoPhillips. See where that takes you. You know, brain dead. You don't trade in and out of these things. You just hold them forever and add to them on dips. So you could look at energy right now as potentially a dip worth buying. That's up to you. We're going to leave that up to you. No buy or sell recommendations here, but you could take a look at mega cap energy right now. Buy the dip, you guys. I never thought crude was going to get this cheap. Wild. Especially given the backdrop of all this inflation, and weakness in the currency. I really think crude should be like 100 a barrel right now. We're at 70, guys. So could be some opportunity in mega cap energy. But again, going to leave that to you guys. We can discuss crypto. So that good old Bitcoin hanging out right now around 44,000, guys. Love to see it. Big fans of Bitcoin and crypto on this channel. Bought a little bit of Link last night. Got a fill on Link in the about 1306. Got a little bit of chain Link, so you can take a look at it. Dipped to 1254 last night and then popped back into the mid 14s. So added a little bit of chain Link. Just look at the majors, you guys. Look at some of those altcoins that have market caps over 50 billion. Those networks are going to be incredibly difficult to displace. So pick your poison. Certainly, in my opinion, want some Bitcoin, certainly want some ETH. And you can maybe throw in a little bit of Solana, a little bit of Chainlink Labs, a little bit of XRP, a little bit of Avalanche, maybe. Other coins you could look at, like Sandbox, if you're still bullish on the metaverse. Or I love Pepe. I love Harry Potter, Obama, Sonic, 10 Inu. So you can go ahead and look at Harry Potter. You might think I'm being ridiculous right now, but Harry Potter, Obama, Sonic, 10 Inu, the crypto, has a $100 million market cap right now. And I'm noticing it is climbing the rankings of the meme coins. So, the ticker's Bitcoin, guys. So if you feel like you missed the Bitcoin train, well, you can still buy ticker Bitcoin, Harry Potter, Obama, Sonic, 10 Inu. Get 5,000 of those for like $400 to see what happens. It might change your life. So where do we go from here for markets? Kind of depends on interest rates, you guys. If the Fed cuts rates 7 times this year, that'd be hyper bullish for markets. And if the Fed were to only cut rates, 2 times or 3 times, or just end up holding rates as steady as they can for as long as they can, well, the market might start to give some of this back. So just keep an eye on the Fed interest rate expectations. If you're bullish markets and risk, you want to see more interest rate cuts for this year. So leaning towards 7. And if you're more bearish on the markets and you think markets are going to be pretty boring or even move lower this year, you're betting on a Fed that only cuts interest rates maybe 2-3 times this year, maybe delays any interest rate cuts to the back half of the year. Something like that could really cause markets to begin to tumble. So you're going to want to watch those bond yields. You're going to want to watch interest rate cut expectations. What the knock-on effects of Fed policy are going to be. These are all the kind of things you're going to want to be mulling around. I think 2024 will shape up to be a better year for energy than it started. So I think another good starting point could be taking a look at crude oil at about $70 a barrel right now and starting to look at some of those mega cap energy companies like Chevron and Exxon. Could be something totally worth taking a look at. Really, just, everything for markets this year depends on those interest rates, like I said. So that's really all I got for you guys for right now. We'll reconvene as things progress. Thanks for hanging out with me. Like, subscribe, comment, share, whatever. You guys are awesome. We're just going to keep going, all right? Hope you got something out of this. Till next time.